If one bad month would wipe out your business, you don't have a business, you have a high risk job, or you're a trapeze artist. So one client that we worked with had 0.9 days cash reserves that got built up to 3.2 months, and let me show you how. Hi, I'm Michael from MDH Accountants. We help business owners rectify their cash flow, fix their margins and build their companies. If this is of interest, click subscribe now. Being honest, most business owners run their businesses with less than 2 weeks cash. They are living right on the tightrope of how they're going to pay VAT, how they're going to pay payroll, which supplier is shouting the loudest, and this is causing a massive amount of stress. There's no forecast, there's no planning, there's no control, and there's just this constant rock on their back on how they're going to find cash within their business. Ben, not his real name, runs a fabrication shop, and while he turned over £900,000 a year, he earned decent margins. They're more than fine. But within his business, he struggled. He was taking money willy-nilly out of the business. Whenever the bank account looked okay, he would just take some money randomly out of the business, which would be at the expense of not paying his tax and his suppliers on time, which was causing him a massive amount of stress. What we changed was the target buffer. So when we got into the business and we calculated what the monthly overhead is, it was £78,000 a month. So if we're going to get 3 months worth of runway, we needed to get this to 234. So when we're looking at the business, we're setting what the target is and actually defining what good looks like. So 78 grand is the monthly overhead. Going forward, we have to keep a really good eye that we're maintaining that overhead. But overall, we're looking at cash reserves of 234, and it's then working backwards to see how we get there. We installed a 13-month weekly forecast in the business. That's where we were plotting in exactly when the customers were actually paying from the business and also what costs were coming up. And having a good idea of understanding what were annual costs, i.e. if you're paying for a software 12 months in advance, and which monthly costs were coming out of the business. And yes, this includes VAT, PAYE too, so we're accounting for all our taxes as we go. Massively important. So we then looked at the margin and the working capital levers. So the margin was really important because in my mind, that's normally where a lot of business owners win or lose. So what we did was we looked at the margins and we ended up putting prices up by 6%, and most companies accepted this. This was really good because this didn't actually affect his cost. It went straight on the gross profit, and you got it, it went straight on the bottom line too. And then we looked at improving the working capital levers as well. Debtor days was a little bit higher, not really out of control, but we trimmed some of it down. Some of the stock that he was holding, he didn't need to hold as much stock that he needed to do. He could buy it at a similar price on a more just-in-time basis. And then we also looked at some of the creditor terms on negotiating additional time that he could pay creditors for that was all consenting adults, but without pissing them off at the same time too. So when we actually went through all of them drivers in the business, it freed up lots of working capital for him. And what could that do if you did the same exercise for you and your business too? Cash runway was 9 days and it turned into 3.2 months. So if he's got 3.2 months cash runway in the business, that means he doesn't need to earn any income for 3 months and he'll still be okay. Now, if you're sitting there now and you're on 9 days, 1 day a month, how much better would you feel after 3 months? I think that would be really reassuring. Reserves were built. Reserves were built at £251,000, and that includes tax pots. So instead of going, oh my God, how am I going to find this tax? I didn't believe it was this much. Oh, that's really caught me by surprise. Doesn't matter. Well optimized tax. The cash is in the bank, get it in, pay it, get on with your life. Debtor days were taken down by 10, and we put in a policy where we defined what his nice to earn number was, and you got it. We optimize it for tax. He takes it out of the business on a monthly basis instead of taking random ad hoc stuff out of the business, which was just draining him and also making him massively erratic. Here is the exact playbook or blueprint for you to steal or implement today. Define what your 3-month number is. So you can either take total overhead or you can take key fixed overheads, add them up, and what do they equate to? And you want to have a look over the past to see if they've changed much at all, because you don't want to be aiming for something that is going to be completely wrong, because that's going to mess up your calculation and make you feel naff. Sometimes prices do change and it has to be flexible, but you want to make sure that the target you're aiming for first is your best. Is your best attempt at that target, is not going to change afterwards. Building a rolling 13-week forecast. If you're going to build a 13 rolling week forecast, you will understand how cash comes in and out of your business. You will spot wins, you will spot levers, and you will spot drivers that will help you improve. Create pots and automated sweeps. So whether you manage your balance sheet where you've got it in, we look at your balance sheet, your net assets, whether you put the tax in separate accounts, I don't mind as long as it works for you, and more so that you do it consistently. So make sure that you're not looking at your bank account, which every business owner does, regardless of how many times that I bang on about this, that you are actually looking at what tax is coming up and then how you can get over it at the same time. Because the less you worry about tax, the more you can concentrate about your business going forward and looking to grow it and make it even more successful than it is today. Remuneration planning, which is how you take money out of the business in the most tax efficient way, massively important. Every single client at MDH has this service, and we're looking to minimise their tax to as much as legally possible without saying, oh, sorry, we missed that, or we're a bit late for that. It just can't happen. You know roughly what you want to take in advance. I know everyone would always want to take more, and that's okay. But what you want to do is, right, I'm taking out this amount per month, and this is how I'm going to do it. It's got to cost me this amount of tax. And know that figure in advance. Your working capital levers and drivers, as well as your margin. So you want to make sure how much you can then first calculate working capital, and then how you actually then measure that so it goes down. So it's not pregnant with loads of costs. How do you get it as lean as possible without being a skinflint or a miser that's going to have a negative effect on your business? And then with your margin, how can you constantly tweak margin so you're improving your margin so you just overall make more money? If your runway is less than 1 month, any non-critical payment or zombie payment, freeze it now or close it, so you are building up cash runway in your business. If your debtor days are more than 35, you need to take a long, hard look in the mirror. Because if your debtor days are more than 35, you have work to do. So get on it and do stuff now to make sure that your cash then shines, and 35 not turn into 45, into 50, into 60. 35, first of all, get it lower than it is now. Then look to get it 30, under 30, and the lower you can get it below 30, all the better for me, because more of it's in your bank account. If your annual costs are really high and you're not getting a return on investment by paying early, switch them all to monthly. Don't have money sit in your supplier's bank account when you can switch it to monthly payments. Owner taking what's left. Why don't we flip this into what the owner what's a nice number for the owner to earn, and how does the business earn more than that so it can comfortably pay that payment to the business owner and also leave money to reinvest back in the business. No forecast? Dead easy, build it. And if you can't build it yourself, get some help. I know someone that I can recommend who will be able to help you with this perfectly. If you want help, I'm more than happy to run one of our quarterly sessions with you. We can look at the key drivers of your business, both the lag and lead factors too. What we can also do is have a look to see on your customer makeup, on how your customers are looking and how your income is made up. And what we'll also do as well is we'll look at potentially what the 5 years would look for you on a very, very high level. If this is of interest to you, click clarity below and I'll send you the link for you to be able to book in a session today. One bad month should not break your business. You should have some level of protection that if you do have a bad month or 2 months, you are there protected because you have the cash runway in your business. And if you haven't, this is the time now to start working on it. If you're interested in this, click subscribe for more of our videos.